Welcome to another daily recap. Today is Thursday, January 18, 2024. It is 9:05 a.m. Eastern, about 25 minutes before the market opens, and there are 7 levels that you see on the chart that have been calculated, identified, and these will be the levels that we trade against in the E-mini futures. You may recall in yesterday's video, there was a line on the chart from that morning at 473. They didn't get to it. They came up short. Well, there was an indication on the hourly, several indications on the hourly chart that there could be an interim trend change and the spiders might go higher. Well, they gapped above that 473 and they're currently hanging around 474 in the pre-market. So the question is, are they going to follow through and go higher? And if they come back, then we have either direction. We have levels to trade against in the E-mini futures to take our base hit scalp of 40 cents or 4 points, as you know, and hopefully there'll be more than just 1 or 2. And we'll take a look at how any trades taken at these levels played out after the market closes this afternoon. Well, it was a good day. Now that the market has closed for the day, you can see the price action in the spiders and see that 4 of our levels were hit. The majority of the resulting trades worked out well. Let's take a closer look. All the relevant levels have their 5-cent buffer applied now, including the 474 level, which when the 9:45 a.m. candle closed, the spiders were under, and they were not within the range we've discussed before. So the trigger point for the E-mini short happened when the spiders came up into and touched 473.95. That was in the 9:49 candle. And a market order of E-mini contracts quickly produced the first base hit of 4 ES points when they fell away a few minutes later, and this was all before 10 a.m. They played around with this level, this 474 zone for a while, but no more trades taken at this level. They tried to get up to 475.16, couldn't do it even after trying a few times. So later in the day, the spiders started falling in a bigger way, and they got below the first level here. And an order was keyed in the system to go long with ES contracts if and when the ES or the spiders hit 472.81 on their way down. And they did that right around 1 p.m. And as designed, this level was good support. The next base hit was in the books about 30 minutes later when the spiders built up enough steam to make a run north again. So by the time they got up to 475.21, which is 475.16 with the buffer applied, an order was primed to go short in the E-minis again if they touched 475.16. Now, there's always the possibility that since they couldn't get up enough juice to reach this level a few times before and earlier in the day, that this could be the time they hit it and maybe have built up enough to bust through it. This is still the calculated level, and it has not been hit today, but it's just something to be aware of when the spiders start to show you that maybe the level they're really respecting might be a few pennies off, like a little lower in this case, because they came up exactly here at about 475, hit it again, pulled back. So you have some options. So what do you do when you see the spiders come up to almost exactly the same price under your level and pull away each time, like, here and here? Well, you have options. You can treat this like a process and enter the short position as planned, knowing that they might go higher. The trade might not work out at the precise level. Or you could not take the trade at all at this level and just wait for the next opportunity, which in this case would be the next level up. By this point in the afternoon, it's more likely that it'd be the next level up than like way down here at a level that wasn't hit. Or you could sell somewhere in the middle, like treat this whole area as a zone. But keeping things simple, like every other trade that I show and track in this log, this one was taken by the book. The short trade was entered in the E-minis when the spiders did hit 475.16, and almost immediately they shot up and were out of the money. They did come back a little later, and it's not a huge surprise that they came back to almost exactly this same 475 zone where they had kind of poked through a couple times from underneath. So really that was a level that they were gunning for. You can see that now. But since you're in the short trade and out of the money, you've got to play by the rules. So you wait to see if they'll give you a base hit before the time expires above the fumble threshold to call this trade a fumble. And if that happens, you invoke plan B. So while they did come down a little and back in the money, it wasn't enough to snag the base hit, and the fumble signal happened when the E-mini position was 5 points out of the money. And at that point, the position was reversed, and the reversal did give a base hit pretty quickly. The final part of that trade was closed out before the spiders got up to this last level at 476.40 or 35 with the 5-cent buffer applied. So when the spiders hit 476.35, the time was 3:26 p.m. So it's pretty close to my cutoff, but still okay for a trade. So I took this one, and as designed, this one did provide another base hit, the 4th one of the day when counting the one from the reversal. So all in all, the trades at today's levels were above average. So looking at the log, the first base hit was at the level here in column E. They came down and got the level below, and then they went up to the one at column F, and that was the fumble, loss of 5 ES points, and then a gain of 4 points on the reversal. And finally, the last standard base hit at the end of the day at this last level. So a net gain of 11 ES points for the day. So that's a wrap. I hope you find these videos interesting or helpful. And if so, consider leaving a comment. Let me know your thoughts. And if you're so inclined, feel free to subscribe. Thanks and have a great day.